Welcome back, ladies and gentlemen. This is the Bearable Bull here. And I got this aggressively average content for you today, as we have so much to discuss today. In what may be the last few days that XRP is staying suppressed at these price levels. Ladies and gentlemen, Kevin Cage said earlier today, the probability that alts move up nicely this year is extremely high. We've yet to retrace it all, and there are too many similarities between 2015-19 bottoms. I plan to take some nice profits over the next 12 months and stagger out to buy later for some lower price targets, and that is 100% the same boat I'm on. Ladies and gentlemen, on my channel recently, we've been very bullish on the crypto market. We were at rock bottom values. I've been bullish on this market. 2022 was a horrendous year. 2023 is looking horrendous as well. But this time around, it's for the banking system. And crypto, specifically XRP, is looking more and more like a safe haven, away from the fiat currency Ponzi scheme. I can't stress this enough. Risky is the new safe in 2023. Any place that used to be safe traditionally is now up for systemic risk. And if you're here innovating, looking for solutions to problems, you're gonna come out on top. Here we have a powerful clip from Brian Brooks, my favorite regulator, and now part of the H-Bar Foundation, discussing exactly what is going on in the banking system right now and how absolutely nothing happening is by coincidence. Everything is synchronistic. The series of events you're about to see unfold had no randomness to them. And if you still believe in coincidences after the past 3 years, you've been living under a rock.
I think it's pretty clear there has been a decision across the bank regulatory agencies in this administration that crypto is inherently risky and needs to be extricated from the banking system. The way the bank regulators work is that they are highly coordinated. I mean, when I was running the OCC, I had a weekly call with the FDIC chairman and with the vice chairman of the Fed for bank supervision. We talked every week for an hour and talked about what our priorities were for the coming week, how we could support each other, how our actions would affect the system. So these things are not accidents at all. I'm highly confident of that. I think it's
absolutely nothing is an accident, my friends. The Black Swan capitalist states the Fed has no intention of fight inflation. Their endgame is to crush the economy and the consumer. This will create a crisis big enough for people to accept the new financial system and central bank digital currencies. The new Fed bank backstop has scope to inject as much as $2 trillion. And ladies and gentlemen, we're about to get into a lot more of that in tomorrow's video, as tomorrow's video is going to be a bombshell as well. Here we see that UBS is agreeing to buy Credit Suisse for more than $2 billion. And what we're witnessing is band-aids being put on the banking system from every direction. Bigger banks buying smaller banks, and potentially no end in sight. Fed Chair Jerome Powell is not looking to stop raising rates, and I promise you, he's going to break something in the financial system very, very soon if this doesn't stop. Inflation is bad. The interest rate hikes are just as bad. There are no solutions other than the CBDC XRP endgame, and the infrastructure is being built out as we speak. Please, before I continue, listen to Jerome Powell tell you what the current plan is in the days, weeks, and months to come.
Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If a totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes. Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Federal Reserve, we will do everything we can to achieve our maximum employment and price stability goals.
And that, my friends, is what they're signaling. More rate hikes to come. But I promise you, something will break to the point where they're going to pause and then pivot later this year. In the meantime, March 20th, 2023, ISO 20022 is going live. And for those of you people thinking that what I'm saying is hype and nonsense, fuck you. ISO 20022 is way bigger than you might think at first. And this was a direct quote from Bob Way, one of the first employees at Ripple, letting all of us know the magnitude of what it means. This replaces the previous Swift standard messaging system and adds a lot of other things. And what all of this should mean for all of you is that the infrastructure for the new payment system is being put into place tomorrow. Messages are going to get a quantum boost. Let me make something very clear. There are no ISO compliant crypto tokens. But you know what is ISO compliant? RippleNet. What do you think's going to happen when this update occurs? The interoperability of the messaging system underneath the same language will be implemented, and this will then allow for the later adoption and utility of all these crypto tokens. The XRPs and Stellars of the world and other coins we correlate with the ISO standard will then have the messaging infrastructure in place to allow the settlement system to exist. What I don't expect immediately is an absolute moonshot, but what I do understand is ISO going live tomorrow will allow utility and adoption to take place at any given moment. There are no coincidences with this banking crisis. They're beginning to roll out events to act as distractions for what's occurring right now in the banking system. And it'll be the perfect cover for the financial system imploding. Ladies and gentlemen, what you're watching is the systematic implosion and rebirth of the financial system. And there's no accident. The former CTO of Coinbase is calling on a $1 million Bitcoin price in 90 days. While I absolutely don't expect that his prediction will come true, an individual like this, a former CTO at Coinbase, is not just throwing nonsense in the air. This man has connections upon connections, and he understands just how crazy the world and the banking system is getting. He thinks most banks are insolvent in the United States. Hyperinflation will commence, and potentially political tensions will rise. And man, do we have even more to discuss when it comes to that in tomorrow's video. But you see, guys, what I really want to discuss right now is how, as these events are all unfolding in real time, with ISO going live as the banking system is failing, with the end of this Ripple XRP case within the next week and a half, there lies in the background the FedNow instant real-time payment service going live in July. While this directly will not use XRP, it is still part of the infrastructure of the new digital payment system. This is a massive step in updating the entire system. And you better understand the warning Caitlin Long is discussing. The FedNow payment system, she says, will enable even more bank runs. And if this is in fact the case, a massive crisis is about to hit. We're all aware. We all know it's coming. We're living through the storm. And we're all on the same path of becoming the new 1%. Nobody said it wasn't going to be a bumpy road. But we're all making it through together.
And if you look at the balance sheets of the banks, virtually none of them are sitting on enough cash to back demand deposits that can be withdrawn at the speed of minutes now. So here's the thing. It used to be you had to go to a bank branch and fill out a paper form to make a bank withdrawal. Now you can do it on your phone. What's interesting is that the bank regulators have for a long time hated the most tech forward banks. They like the concept that everything has to be analog because it slows everything down. Just yesterday, the Fed confirmed that FedNow, which is the new payment system that is ultimately going to replace FedWire, is coming online in July. And it's a 24/7, 365 system. And there was a lot of information in the press release about the testing requirements that the banks that are going to be rolling it out in July will have to comply with. There was zero acknowledgement that the speed of money movement is going to increase inherently when you get a real-time system. So we were talking about how long it takes for you to put the payment instruction in, analog versus online banking or API. But now there's also speed up of settlement once the instruction is received by the bank. And that is going to be real time. Now, FedNow only limits you to $100,000 at a time, but $100,000 at a time equals increased bank run risk inherently. And I was floored that the Fed said nothing in that press release about requiring the banks that are going to be offering FedNow to hold more liquidity. It means they don't get it yet.
And guys, that's a powerful thing Caitlin Long just stated. The Fed doesn't get what they're doing yet. That's frightening. Everything going on right now is a Federal Reserve financial science experiment. They're playing with people's livelihoods to bring this new system of control online. And when a government and its currencies begin to devalue and lose control, anything is possible. Ryan Selkis, founder of Masari, stated there is no scenario in which I would comply with the redux of Executive Order 6102 when they seized gold back in 1933, I believe. Congress should make Bitcoin ownership and self-custody an explicit right to prevent more dystopian executive overreach. In addition, he stated Congress should oppose any and all efforts to ban or restrict the use or personal possession of Bitcoin and other cryptos. Oppose any and all efforts to unfairly target or impede the development, accessibility, and security of Bitcoin and other digital tech. Him saying something like this is because the very real chance that the government may not like private ownership of crypto is on the table. Governments may be on the verge of trying to seize your assets or restrict your ability to own it personally. Why? Because if you own your assets, you can't be bailed in. If you own your assets, other banks can't make money off you. Isn't that the crazy reality? The criminals, the thieves, the opportunists try and make laws to prevent you from being in power and make your money the same way they make their money. This is the reality. This is why I'm going to warn every single one of you. If the bankruptcies of crypto exchanges like Voyager and Celsius did not scare you, if the FTX collapse didn't scare you, and this warning shot fired by Ryan Selkis and the warnings of the Coinbase CTO should prompt you to take action into ensuring your digital assets are off of these exchanges, because in times of crisis, exchanges may go down and self-custody will be your protection. Ladies and gentlemen, I'm not trying to instill fear here, but an ounce of prevention beats a pound of cure. And you better believe you don't want to learn that lesson the hard way. With XRP on the verge of exploding, and with numerous other indicators pointing in that direction as well, the last thing you want to do is get robbed by your government for whatever random reason they decide to do so. Keep your eyes on the prize. Take every measure you can to protect your wealth in the next days, weeks, and months, as I think our time has finally arrived. It's time for the XRP army to finally make some bank money, because as we've been winning the lottery in slow motion, it's finally getting to the point where we get to cash out. Ladies and gentlemen, this is the Bearable Bull here. Thanks for tuning in. As always, I appreciate every single one of you. Now I'll be back tomorrow with another video.
Why do I hold XRP? Because Ripple's the chosen one to lead the new global digital payment system, and they use XRP. In 2013, the Federal Reserve began looking for faster payments options. 2 years later, an action plan was born and a federal payments task force was created. It included one company focused on crypto, Ripple. In 2014, the World Bank and Better Than Cash Alliance, which includes the Bill and Melinda Gates Foundation, Clinton Global Initiative, and the governments of 32 countries, put out a report called The Opportunities of Digitizing Payments. 1 year later, the Better Than Cash Alliance featured one crypto company on their website, Ripple. Today, Better Than Cash Alliance and all other UN initiatives are focused on a single agenda, the Sustainable Development Goals for 2030. You can see the SDGs logo on Bill Gates' lapel, world-leading companies, the Better Than Cash Alliance website, and on the UN's official exchange, Exchange. What crypto is Exchange officially utilizing for their carbon credit solution? XRP. The world will move to a new international standard for exchanging electronic messages between financial institutions by 2025 called ISO 20022. Who was the first ISO 20022 member focused on distributed ledger technology? Ripple. Who's partnered with over 300 financial institutions, including Bank of America, American Express, PNC, Santander, SBI, HSBC, Standard Chartered Bank, Bank of England, India, Singapore, Scotland, Australia, and Indonesia, the largest banks in Japan, Canada, Egypt, the Middle East, United Arab Emirates, Thailand, Morocco, Bhutan, South Korea, Brazil, and Latin America? Ripple. Who is a former employee overseeing the Federal Reserve? Ripple. A former employee overseeing the world's largest asset manager, BlackRock's digital asset division? Ripple. Leading Australia's CBDC effort? Ripple. Who hired a former Treasury of the United States? Ripple. 2 former Federal Reserve attorneys to their board? Ripple. 2 former Clinton and Obama advisors? Former Minister of Defense and Economics of Germany? Former business director at Swift? Former Swift board member? Former CFO of PayPal? Former head of the DTCC? Former chief business officer at Uber? Former VP of Amazon and former SEC chair on their legal team? Ripple. Who's a member of the Digital Pound Foundation, Digital Dollar Project, Digital Euro Association, Mojaloop, IMF's High-Level Advisory Board on FinTech, Hyperledger Blockchain Consortium, Open Payments Coalition, Faster Payments Council, Global Payments Steering Group, Cross-Border Working Group, International Association for Trusted Blockchain Applications, Crypto Climate Accord, University Blockchain Initiative, World Wide Web Consortium, and a featured partner of the World Economic Forum with 3 members of their team directly listed on the WF website? Ripple. Now, does Ripple and XRP sound like they're going to disappear, or do they sound like they're part of a much bigger plan? You decide.